The golden rush begins. Picture this. It's late 2023 and the world is still shaking off the pandemic hangover. Supply chains are a mess, inflation's biting, and everyone's glued to their screens, scrolling through doom and gloom. But then, a whisper turns into a roar. AI is the future, they say. Not just chatbots or funny cat videos. No, this is the real deal. The kind of tech that could rewrite economies, cure diseases, or, let's be honest, automate your job while you're still learning it. Fast forward to November 2025. Here we are, 2 years deep into what feels like the gold rush of the digital age. And at the heart of it all, Nvidia. Yeah, that chip maker nobody really knew about until Jensen Huang started looking like a rock star in his leather jacket. Today, Nvidia's market cap sits at a staggering $4.6 trillion. That's more than the GDP of every country except the top 5. Apple? Microsoft? They're chasing shadows. Nvidia isn't just winning the race, it's lapping the field. But how did we get here? Let's rewind a bit, because every great bubble starts with a spark of genius. It was the launch of ChatGPT in November 2022 that lit the fuse. Suddenly, everyone from Wall Street traders to your grandma's book club wanted to know, what's this AI thing? OpenAI's demo went viral, 100 million users in 2 months. Boom. Investors smelled blood in the water, or rather, silicon. By early 2024, the big tech titans, Microsoft, Google, Amazon, Meta, they weren't just dipping toes. They were diving headfirst, wallets open. Microsoft poured $13 billion into OpenAI alone, then kept the faucet running. Google reorged half its company around AI. And the money? Oh, the money flowed like cheap champagne at a tech conference. Nvidia rode that wave like a pro surfer. Their GPUs, those graphics processing units originally built for gaming, turned out to be perfect for training massive AI models. Demand exploded. In Q1 2024, Nvidia's revenue jumped 265% year over year to $26 billion. Stock price, from $30 in 2022 to over $190 today. Analysts called it the new oil. VCs threw billions at startups promising AI everything. Data centers sprouted like mushrooms after rain, hyperscalers like AWS and Azure expanding footprints from Virginia to Singapore. But here's the hook in this fairy tale. Bubbles don't form in calm waters, they need frenzy. And by mid-2025, the frenzy was biblical. Elon Musk tweets about XAI needing the most powerful AI cluster ever. Sam Altman at OpenAI whispers of trillion-dollar visions. Governments, the US. CHIPS Act funnels $52 billion in subsidies. China counters with their own AI push, despite trade wars. Europe? They're late to the party, but scrambling. Zoom out, and the numbers are intoxicating. Global AI spending hit $1.48 trillion this year. That's up 50% from 2024. Hyperscalers alone committed $405 billion in capex for AI infra in 2025. Power grids strain under the load. Blackouts in Texas data hubs make headlines. Nvidia's Blackwell chips? Sold out for 18 months. Waiting lists longer than iPhone launches. It's exhilarating, right? The promise of AGI, artificial general intelligence, by 2027, say the optimists. Autonomous factories, personalized medicine, cities that run themselves. Nvidia's Jensen Huang struts the stages, prophet in black, declaring, AI is the next industrial revolution. Yet, as we sip this digital Kool-Aid, a quiet voice in the back of our minds whispers, remember 1999? Pets.com? The tulip mania? Because history doesn't stutter. It rhymes. And this rhyme? It's building to a crescendo that could echo for decades. In this episode, we're peeling back the layers of what I'm calling the $42 trillion AI infrastructure bubble. Why that number? Because analysts now project cumulative AI infra spend through 2030 could top $42 trillion. Hardware, energy, real estate, the works. That's the size of the US economy, twice over, funneled into chips and servers. And why does Nvidia's $4 trillion crown jewel vanish by 2026? Stick with me. We're just getting started. Building the colossal machine. Now let's talk brass tacks, or should I say, silicon and steel. The AI dream isn't coded in the cloud, it's forged in the dirt. We're talking infrastructure on a scale that dwarfs the interstate highways or the moon landing. This is the invisible empire powering your Grok chats and self-driving dreams. By 2025, the blueprint is clear. Hyperscalers are betting the farm. Microsoft, $56 billion capex this fiscal year, half on AI data centers. Amazon's AWS, pledging $75 billion more in Virginia alone. That's a plot bigger than Manhattan. Meta's Mark Zuckerberg, he's got 600,000 Nvidia H100s humming in New Jersey, with plans to double that by year's end. Google, pouring $12 billion into Malaysian megafarms. Total, over $200 billion from the Magnificent Seven just this year, up 40% from 2024. But it's not just big tech. Sovereign funds from Saudi Arabia to Singapore are eyeing AI as the new oil. Ironic, since they're ditching fossil fuels for this. Startups. Oh, they're feasting. Anthropic raises $4 billion from Amazon. xAI, Elon's baby, snags $6 billion promising truth-seeking superclusters. And the hardware? Nvidia's not alone anymore. AMD's MI300X chips are stealing market share at half the price. Intel's Gaudi 3, finally shipping after delays. Even custom ASICs from Broadcom for OpenAI, projected to add $100 billion in revenue by 2029. The math is mesmerizing. IDC forecasts AI-optimized servers hitting $490 billion in spend next year, exploding to $2.9 trillion cumulative by 2029. But layer in energy. The silent killer. Training one GPT-4 model guzzles as much power as 1,000 US households yearly. Data centers now consume 2% of global electricity, projected to hit 8% by 2030. That's $1.5 trillion in grid upgrades alone. Water. Cooling these beasts sips 1.7 billion liters daily in some hubs, more than London's annual use. Real estate, forget it. Land grabs in rural Iowa and Icelandic fjords, where cold air's free. Oracle's $10 billion Tennessee campus. A 1 million square foot behemoth drawing 1 gigawatt, enough for 750,000 homes. And the supply chain? Tantalum from Congo mines, rare earths from China, geopolitical tinderboxes waiting for a spark. This build-out isn't incremental, it's exponential. Venture funding for AI infra hit $50 billion in Q3 2025 alone. Wall Street's all in. Goldman Sachs pegs the total addressable market at $15 trillion by 2030. McKinsey? Even rosier at $42 trillion cumulative infra pour. Chips, cables, cooling, code. It's a self-fulfilling prophecy. Spend big, hype bigger, valuations soar. Nvidia? They're the toll booth on this highway. 80% gross margins on Blackwell B200s, priced at $70,000 a pop. Q2 earnings, $30 billion revenue, up 122%. Stock splits, analyst upgrades. It's party time. Jensen's keynote at GTC 2025, standing ovation for sovereign AI, nations building their own stacks. But pause here, friend. Empires rise on ambition, but they crack on excess. We're not just building machines, we're mortgaging the future. Power shortages in California force rolling blackouts. Chip shortages. TSMC's fabs in Taiwan hum 24/7, but typhoons and tensions loom. And the ROI? Enterprises are dipping toes. 55% of AI spend in 2026 on inference, not training, per Gartner. But where's the killer app? Beyond hype, the trillions in pipes are thirsty for real water. This machine is colossal, beautiful, terrifying. It's the backbone of tomorrow, or the house of cards for today's fools. Next, we spot the fissures, cracks in the foundation. All right, we've marveled at the machine. Now, let's play devil's advocate, because in finance, the devil's always got the best stories. Bubbles aren't born evil. They seduce you with logic, then gut punch with reality. And in this $42 trillion AI saga, the seduction's peaking, but the gut punch, It's warming up in the wings. First crack, demand delusion. Sure, hyperscalers are spending like sailors on shore leave, $500 billion projected for US AI capex in 2026. But enterprises, the rank-and-file businesses supposed to foot the bill, they're hesitant. Deloitte's survey, only 25% of Fortune 500 have deployed Gen AI at scale. Why? Integration hell. Legacy systems don't play nice with LLMs. Costs? A single inference query on GPT-4o costs pennies, but scale to millions. Millions in OPEX. Gartner's blunt. 80% of AI projects will fail by 2026 due to data quality or ethics snags. Remember Watson? IBM's $4 billion AI flop in healthcare echoes here. OpenAI's own drama, boardroom coups, Altman's oust and reinstate, screams growing pains. And the talent? Every PhD in ML is bid up to $500K salaries. Brain drain from academia to Arxiv echo chambers. Second fissure, the chip cliff. Nvidia's moat is legendary, but it's eroding. AMD's shipments up 200% YOY. Huawei's Ascend chips powering China's firewall. And depreciation, Michael Burry's warning bell. These GPUs lose 20–30% value yearly as models evolve. Buy a 70K Blackwell today, obsolete by 2027. Hyperscalers are already hoarding, but overcapacity looms. TSMC whispers of softening orders, Q4 2025, energy apocalypse incoming. IEA projects data centers sucking 1,000 tolerant T1 by 2026, triple 2022 levels. US grid, decades behind. BlackRock's Larry Fink, AI's power hunger could spike bills 20%. Europe, bans on new builds in water-scarce zones, and carbon, AI training emits 500,000 tons CO2 per model, greenwashing at its finest. Geopolitics? The elephant in the server room, US export bans on advanced chips to China? Backfiring, Beijing's $47 billion fund births homegrown rivals. Taiwan quake in September 2025 halted Nvidia shipments for weeks. Supply chains? 90% of advanced nodes in one quake-prone island. Valuations? Nvidia at 60x forward earnings, .com deja vu, PE ratios screaming overbought, short interest ticking up, Burry's betting against. Even Altman admits vibe revenue. Sales on hype, not utility. Wall Street split. Bulls like Bank of America hiked targets to $250 share, citing enterprise inflection. Bears? Derek Thompson in The Atlantic. This pops when ROI flatlines. Cumulative 42T spend sounds epic, but it's debt-fueled. 1T in green bonds for infra, yields spiking on inflation fears. The crowd's euphoric, but whispers grow. Q3 earnings calls, cautious tones on lumpy demand. Stock dips 5% post-Nvidia report. AI fatigue, headlines blare, yet FOMO reigns. Retail investors piling in via Robinhood, memeing Kak Nvidia to Mars. These aren't just cracks, they're fault lines. The machine hums louder, but the ground trembles. 2026? That's when the quake hits full force. The Vanishing Act, 2026 and beyond. So we've built the beast, spotted the scars. Now, the finale. Why does it all unravel in 2026? And how does Nvidia's $4.6 trillion empire, the envy of empires, evaporate like morning fog? It starts innocently enough. The inflection point. Q1 2026 earnings roll in. Hyperscalers report CapEx pause. That 500B projection? Slash 20% on efficiency gains. Why? Moore's law on steroids. Algorithms optimize, needing fewer flops. Inference workloads dominate per Gartner. Cheaper CPUs over GPUs. Nvidia's guidance? Softening sequential growth. Stock? 15% in a week. Panic sells cascade. Then the dominoes. Power crunch bites. California mandates AI curfews. Blackouts hobble clusters. Enterprises bail. McKinsey, 40% cut pilots amid recession whispers. Fed hikes rates to 5.5% on sticky inflation. Thanks, energy bills. Risk-off mode. VCs dry up. Startups fold. Anthropic's next round? Crickets. Supply floods in. Those 18-month backlogs? Cleared by overbuild. AMD undercuts on price. grabbing 30% share. China's knockoffs flood gray markets. Nvidia's margins slip to 70%. Still fat, but Wall Street yawns. The pop, not a bang, but a whimper. By mid-2026, AI infra spend plateaus at 2T cumulative, far shy of 42T dreams. Nasdaq sheds 40 trillion in vapor valuations. Tech index, 50%. Nvidia, from $190 to $80. Market cap, back to 2T, then 1T as lawsuits fly. Overhype class actions from pension funds. But here's the twist in our tale. Bubbles burst, but seeds survive. Like the dot-com crash birthing Google and Amazon, this reckoning prunes the weak. Survivors, efficient players, edge AI, specialized chips. Nvidia pivots to software, autos, robotics. Huang's full-stack vision shines. Lessons. Hype's a drug. Data's the antidote. Invest in utility, not unicorns. Regulate the grid. Ethicize the code. And remember, tech revolutions aren't sprints. They're marathons with blisters. As 2026 dawns gray, we'll look back on 2025's fever dream with a wry smile. The 42T bubble? It taught us. Innovation thrives on reality, not illusion. Nvidia's vanishing act? Just the curtain call for Act 1. Thanks for riding this roller coaster. Hit subscribe, drop thoughts below, bubble or boom. See you next time, when we chase the next ghost in the machine.